State Bank of India Chairman Rajnish Kumar has vociferously defended the country's public sector banks. In an exclusive interview with India Today, the SBI chief claimed that the worst is over for the Indian banking system in terms of bad loans and admitted that the timing of the big bank scam was very bad. Take a look.
Hello and a very warm welcome to a special conversation with the chairman of the largest lender of the country, Mr. Rajnish Kumar of the State Bank of India. Many thanks for joining us. We are of course sitting in the iconic State Bank of India building on Parliament Street, and right across the street is the Government of India's Department of Financial Services, and they, I believe, sir, are very busy at the moment trying to decide and trying to figure out how do we reform the Indian banking system. How did we really get here? That's the most pertinent question, because the Indian banking is facing a crisis which, since liberalization, it's never faced. It's facing a credibility crisis. We are seeing scams, we're seeing NPAs. Indian banks' NPAs are nearly double of the entire national budget. Who would you hold responsible for this?
You can't fix responsibility just like that, but the context in which today we find the banking system. So we have to understand. So you talked about NPA, the challenge of NPA. I would avoid using the word that there is a crisis per se, but yes, these are very challenging times for all the banks. 9
lakh crores.
Yes.
We are talking about 9 lakh crores of loans that have gone bad.
Yes, but let me tell you that 2008 is when the financial system crisis happened in the US. It all started from the US, and after that there was thought that we need liquidity in the system, we need expansion. So after 2008 the credit expansion happened at a very rapid pace.
Right.
You look at the statistics.
Yes, absolutely. Very aggressive lending.
The expansion happened at such a rapid pace. I think partly, I'm not saying solely, but partly it is a consequence of that rapid expansion. That is one reason, but there are other things also. When we talk about NPA, there are certain internal factors where the underwriting standards or the credit risk management practices, they now in retrospect, I feel that they should have been more robust. So this is the internal factor.
Right.
But there are many external factors also that when the credit decisions were taken, they are taken on certain assumptions. Whenever you give a credit, any bank gives credit, we try to estimate what is the probability of default of that credit, what is the macroeconomic scenario, how the story of the country's growth is going to
But sir, if you look at the most recent case, the PNB Nirav Modi scam, the 11,000 crore rupee scam, what we've been told is that Mr. Modi had actually approached a private sector bank as well, but they turned him away, whereas PNB welcomed him with folded hands. That's the problem, that the public sector banks are run more like a bureaucracy and less like a business, and banking is all about managing risks.
But this is a very, I would say, that very wrong interpretation.
Okay.
So if you take Nirav Modi and Gitanjali Gems together, are there no private sector banks?
Of course,
So
there are.
So this hypothesis, I don't subscribe to that, that the risk management structures in private sector banks is necessarily better.
So, no, I'm not drawing a comparison.
No, I think your question probably gives that Nirav Modi all private sector banks kept out, but you look at the list of the bankers to Nirav Modi as well as Gitanjali Gem, and you will find fairly good mix of public and private sector
Actually,
banks.
at this point, public sector and private sector banks both are in dire straits. So
that is where.
Yeah.
So basically, anyone who was in corporate banking, they are having trouble. If the business model was that you kept away from the corporate banking, then you may not be in trouble. So that is one thing. As far as Nirav Modi case is concerned, it is not a credit risk. It is a operational risk where the supervisory controls, they are found to be lacking prima facie.
Right.
I have not gone into detail. I don't have the details of what actually has happened. But prima facie, as a banker, it appears to me that the lines of defense, which we talk about in the risk management, those lines of defense did not work. In any risk management structure, you have to understand that we work on 3 lines of defense. First is at the branch where the transactions happen. Second is the supervisors or the controllers.
Right.
Third is the audit. So it is not that risk governance architecture is not in place, but somehow it did not work.
We've had the RBI governor, Mr. Patel, talk about why RBI needs to be more ownership neutral, and they've been asking for more powers to regulate public sector banks. We've had a counter from the finance ministry, from Mr. Arvind Subramaniam. What are your thoughts on that? Do you think the RBI needs more powers to regulate public sector banks?
No, that is between RBI and the government. I can't comment on that, but as a regulated entity, till 5 years or 7, 8 years back, we were owned by Reserve Bank of India. So as a regulated entity, I can say that RBI's word or directives or directions or regulations, whatever they come, they are just like the last word for us, and we comply and try to comply. At times we may not be able to 100% comply, but as a regulated entity, we have always felt that whatever RBI says, we have to do it.
But they can't conduct audits on you.
They do. Every year they do annual supervision. So we are part of the risk-based supervision.
Well, SBI has about 1.8 lakh crores as NPAs, and you wrote off about 20,000 crores as bad loans. Would you say that again it's because of the external and the internal factors that the NPA list is so it's a pretty formidable list that SBI has?
Our NPA as at the end of December was 2 lakh crore, and when we talk of write-off, then again there is a huge misunderstanding about what the write-off is. Write-off is nothing but a balance sheet management exercise where in respective loan, if you have made provisions, then you bring down the value of that loan by the amount of provision held. It could be 100%, it could be a partial write-off. But write-off is I would say it's not the right word to use. What we do is that from the above the line, move with the asset to below the line. There is a difference, and that is done from the management perspective, but balance sheet management perspective. But it does not mean that the loan has been waived off or there is no follow-up.
Let's talk about SBI. Are you geared to really understand the risks that the new age businesses bring in, and are you looking or introspecting on how as a bank you need to function, whether you need to be getting more talent from outside, in terms of completely reworking your HR system? Are you looking at that?
Yes, there is a very, I would say, broad-based agenda. One is revamping the corporate credit. So that in SBI we have already prepared the blueprint, and within this quarter that will be implemented. And that means again the oversight on the credit underwriting, where we are giving more powers to our risk department to have a bigger say in the underwriting process. Similarly, for managing the stressed asset, already 6 months back I have created the position of a managing director, and a stressed asset vertical which was already there. Now we are making it more functional, and we are strengthening it. We are doing lateral recruitment to bring in a specialist in resolution.
So you're doing that?
Yes, yes, we are very much doing that.
This is not the first time that we're talking about reforms in public sector banking. We've had the Indradhanush package, we've had a bank boards bureau, we've seen attempts in the past. But in the last 4 years, the sense is that the government announces something and then the agenda gets derailed. Do you think that political moves such as demonetization could have delayed the process of bringing in reforms in the public sector banking system, because the government needed the public sector banks to carry out certain important tasks, and that's probably why a lot of reforms have been put on the back burner and now they're being pushed again?
No, reforms have not been put at the back burner. Even the recapitalization there was a big announcement, and after that there was a conclave where all the bank CEOs participated.
Yes.
Manthan was there, and there is a reform agenda, and it is a fairly big reform agenda which touches all aspects, including, first thing is ease of doing business for the general public.
Right. So I'm aware of that. But my question is, why has it taken us this long to get around to it? Why is it that only now we get a sense that SBI or other public sector banks or the government is looking at this probably for the first time seriously, and in this entire PNB fraud, Nirav Modi running away, Vijay Mallya running away, has probably jolted the system, and it's making the government also not look so good. So why is it that we are only looking at it now? Why didn't we think of this earlier, 2 years ago, when asset quality reviews were called into place, and when we knew that the problem is there? Why is it that we...
No, reform is, it is a continuous process. It is not some sort of a one-time reform or this thing. So even when the government came in, and there was Gyan Sangam in Pune, so a lot of action points were decided, and Banking Board Bureau was also established as a result of that.
Right.
And you have to review again and again. And to say that it has been derailed, what happened that PNB matter, it came at the wrong time, let me put it this way. Because the reform agenda was prepared, and as a part of the capital raising program, there is a very clear memorandum of understanding which has been entered into by all the banks with the DFS or the government, and the agenda has been drawn. All the banks are working on it, but the attention got diverted, unfortunately, on the PNB scam. So let me just complete it as this thing. So what we are seeing today, that everybody believes that it is all scams, all frauds, but that is again a very cynical view in my view. It is not that everything is just everything is wrong. It is not like that. You look at the State Bank of India's balance sheet. Let me put some numbers in figure. My balance sheet size is 32 lakh crore, right? My corporate credit is 6 lakh crore. Corporates and mid corporates. I can be very happy, and all my people will also be happy to let go this 6 lakh crore, right? And I am telling you, my numbers will look fantastic. But is that the approach as the largest bank in the country? Can I take that approach that no more corporate banking for me? I am very happy doing everything other than corporate banking. Still, I will be 2.5 times for the next largest bank. My profits will be higher than HDFC Bank. My valuation will be higher than HDFC Bank. Right. But as the State Bank of India, which is the leader in the banking industry and has certain responsibilities. So today, I am telling you, that very time we often wonder that why should we be in corporate banking? But at times I also think that if I say that I don't want to be in corporate banking, are we doing any justice to the economic growth or to the banking system?
Right. So
the considerations for the public sector bank and the private sector bank, there is an inherent fundamental difference. So while a private sector would solely be guided by the return to the shareholders, but our responsibility as public sector banks are mixed. I cannot solely be guided by the return to the shareholders. So my job in that sense of a public sector bank CEO is much more difficult.
So what are you guided by?
So quarter by quarter, I am answerable to you and investors. There we have to give answer to our performance in terms of how have we performed.
To the government?
To the investors, not to the government, to the public at large. So that is where...
So private sector banks also have to do that, a lot of them
but their sole concern, as I said, is the return to the shareholders. So they can have that what type of customer I want to have, right?
Okay.
Today I asked this question, if a poor man who has 250 rupees in his pocket, in how many private sector banks can he go and open the account?
Okay, fair enough.
You come with me and we can go around and take 100 people and try to open their accounts. So what I'm saying is that we need to have a balanced view. Balanced view would be that whatever are the deficiencies in the governance,
Right.
they need to be filled in.
So
there can be no debate about it.
So let me come to a very pertinent question. You know, there has been so much talk about consolidating public sector banks, reducing government's stake in public sector banks, privatization. I wanted your views on it. Do you think if the government were to reduce its stake, if public sector banks were run more like businesses, where you don't have to worry about the larger good and you have to worry about your stakeholder and shareholder interests, would that help you or aid you in better decision making?
No, one is that our country, in my view, is still has not reached that stage of development, socio-economic development, where we can do away with public sector banks. This is my view.
Right.
There are different views, but this is my view. We need public sector banks for a couple of years. Do we need 21? That is a point of debate. Do we need to have the same strategy for all public sector banks? The answer is clearly no. And what, as I mentioned, that the plan which has been prepared is about differentiated banking. We are a large country.
Right.
We are 130 crore people. And still there is a need for banking outreach. So we may have 21 banks with a differentiated strategy to begin with, where there are large 4 or 5 banks which take care of all segments including corporate. There can be large national banks who are more focused on the retail, consumer and SME banking. There can be a number of banks which have focus on their geography and region because they don't have all India
so you're saying
presence.
21 public sector banks are not required necessarily?
Not required, or they need to have even if they are required, they need a differentiated banking strategy, and that is what the banks, public sector banks, are working on. Once that has been done, and the current weakness which is there in their financials and balance sheet, once that issue gets addressed, which I am very confident that in next 2 years time it will be, and at that time again probably there can be a thought whether there is a scope for any consolidation, but the objective of consolidation also first has to be decided. Suppose we want that there should be another 2-3 banks which should be of the same size as State Bank of India or nearly the same size. Then by consolidating a small bank with a large bank will not serve that purpose. Then you need to consolidate 2 large banks to reach that size.
Okay, fair enough. We're also witnessing a war of words right now between the Finance Ministry, between the RBI. We've had Mr. Vinod Rai coming out and saying that he could not get a meeting with the Finance Minister. How detrimental is this entire ecosystem for effective functioning of public sector banks?
That you have to answer. I don't have to answer that.
I'm sorry, this is...
So,
you are a veteran banker. I'm a
veteran banker, but right now I am focused on my job. So my job currently...
But does this make your job easier or harder?
It doesn't make my job harder, because I or my team or my board is very much concerned that what we do at the State Bank of India, so that it sets a example. It is already, like most of the people I talk to, they always say State Bank is different, which is very encouraging to hear also. So our job is that as a State Bank of India, wherever improvements are required, we bring in those improvements without going into any debate, and we are very focused on what we need to do, and that is what we are doing. And in the process, if some help is needed for the other public sector banks, that also as a State Bank of India, we are very much there to help. But other than that...
so when will we see public sector banks start lending again? When do we see credit demand picking up? And you've just recently increased interest rates. Do we see you increase interest rates again?
No, after RBI's policy of yesterday, I feel that interest rates are not now going to go up, because the forecast on inflation is sort of benign. They've said that there are concerns, but the forecast is benign. And I don't see the rates going up in near future. If at all, if the liquidity situation permits and other factors we analyze, there may be some, we can see some downward trend in the some interest rates. So they are not going to go up for sure at least 1 year. Unless macroeconomic changes suddenly very dramatically.
That's probably, that's the good news that we're going to end this interview with, that the largest lender is not looking at increasing interest rates, and if our conversation is anything to go by, the public sector banks are looking inwards and are looking at bringing in governance reforms. Thank you very much. We wish you all the best. Thank you.
Thanks for watching the video. For more such news and updates, please like, share and subscribe to India Today. Also check out our other great videos from our channel. We know you would love to.